Money Show with me, Kavita Thapliyal. There are a plethora of funds available in the market to invest your hard-earned money in, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? We have Shweta Jain from Investography on board today. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 8657974571. You can also email us your queries on themoneyshow@etnow.tv. Good evening, Shweta, and welcome to the show. And let's begin taking our viewer queries. And first, I have with me Mr. R. Reddy from Hyderabad. Good evening, Mr. Reddy. How are you doing today? Thank you so much for sending us your questions, sir.
Yeah, good evening. Very nice. So I have sent the question. I have got a diverse portfolio, mutual funds, the active funds, large mid-cap,
Right.
small cap, and also infra. Like that, I have listed out, and a few index funds.
Sir, could you please tell us the name of the fund house also? Do you have the names of the fund house?
I have diverse. For example, contra fund. I have put SBI contra fund. In the case of infrastructure, it is HDFC infrastructure and Nippon power and infrastructure. And like that, in the case of index funds, Motilal is there, small and mid cap. And like that, diversified in different sectors. I have gone through.
All right. So in terms of categories, we have got the question, but
yes.
You want to invest some more amount and you want to understand what categories you should be looking at. Is that right?
Madam, about my whatever amount wise is there, about 90 to 92% of my amount I have invested. Another 78% I was just thinking thematic consumption opportunities and and another one healthcare.
Got it.
Whether in active funds, is it wise at this stage to invest in these funds? About 8% of my allocation.
Got it. Shweta.
Yeah, hi Kavita. Mr. Reddy, there is a lot of diversification that you've done, and there are a lot of sectoral and thematic funds that you have. Some of them, even if they're in the same theme, different fund houses may have different strategies and hence may perform differently. So since we don't have all the fund houses, all the scheme names, it's a little difficult. But I'll tell you as a general rule, I don't really like sectoral and thematic funds for the simple reason that you need to time both entry and exit correctly for them. And sometimes they need more time horizon than 3 years. I know you mentioned 3 years for healthcare, etc. But there have been large amounts of periods where healthcare also has been dull. So I'm not really a fan of thematic funds for that reason, because then you have to constantly be and also keep researching this. So it's really difficult for one person to keep a tab on all of this and more. So that's why I wouldn't recommend. I would recommend that you keep a simple strategy. You don't need to have schemes of all of these kinds in your portfolio. These are options that you have, of course, but by over diversifying, you're not giving a chance to any sector, any capitalization to perform. Ideally, it should be simple. Do a passive fund for large cap, because that's where you're seeing that index funds are performing better than your regular schemes. And small cap, I would prefer to give it to fund managers, because there they do have the advantage of choosing, they have advantage of research, and I do believe they still outperform the index. So I think the strategy needs to change a little bit, and too many schemes will only spoil your returns. So I would urge you to think about it.
All right. So these are few changes, Mr. Reddy, that Shweta has recommended. Is there anything else you want to ask her?
No, ma'am. Thank you. Thank you.
All the best, sir. We move on, and I have Mr. S.B. Sivakumar from Madurai on the phone line with me. Good evening, sir. How are you doing?
I am fine, madam.
Thank you so much for sending us your questions, sir. And you have stopped your investment in Axis long-term equity, and you want to withdraw the money after your lock-in period is over, and you want to shift that money to Axis Equity Hybrid Fund.
Yes.
Okay. So you want to know if this move is right for you, and are you also open to some other AMC, or you want to stick to Axis itself?
After the lock-in period, I will move out of this Axis. That is not the issue, because this Axis long-term equity fund for the past couple of years, it is not performing well. And moreover, this equity hybrid fund is also not that much providing a good return. So I'm just, after the lock-in period is over, I'm just thinking of moving into other AMC, madam.
All right. Quick clarity that I need from you, Mr. Sivakumar. So, Access Long-Term Equity is an ELSS fund. You must be getting tax benefit. Now, do you want a same category recommendation, or you are open to a regular mutual fund on which you might not get the tax benefit as per 80C if you are invested as per the old tax regime?
Right now, I'm having Mira as a tax saver fund and
Okay, you already have.
tax
Okay.
saver fund.
Sure. So, Access Long-Term Equity, were you doing an SIP or it's a lump sum investment?
No, I access long-term equity is a SIP mode only, and I stopped my SIP.
Okay.
And after the lock-in
So you have to
period,
make sure that every SIP completes 3 years. You have to make sure that every SIP of yours has to complete 3 years. Okay. So only then you will be able to withdraw. So whatever is done with 3 years, that you can withdraw. But then, yeah, let's move on. What will be your time horizon, sir, for this particular investment in equity?
My time horizon is 10 years, not less than 10 years.
Okay, at least 10 years. All right. So, Shweta, I tried getting some clarity for you. Please guide him.
Yeah, thanks, Kavita. Mr. Shivkumar, I think you can move out of Access as a fund house as well, and you can diversify these funds into a couple of schemes. So I would like that you do UTI Nifty 50. So that's your passive fund. And 10 years is a great time horizon. You don't need to do a hybrid fund for that. You can stick to equity. So UTI Nifty 50 is a great fund that you can invest in. And with it, you can do a combination with a PPFAS flexi cap fund. If you don't like the international exposure which it has, then you can look at a Kotak emerging equity fund if that's something that you like, a little bit of mid cap, large, small cap combination if you would like. I think a combination of two of these, whichever you would prefer, would be a good addition to the portfolio.
Sir, anything else you want to ask Shweta?
Another one point is I am also investing in Tata Digital Fund.
Okay,
for
sir.
the last couple of years is not that much great, but I am getting some sort of result right now. But I should. My horizon of period is more than 7 years. So if I can continue with the SIP there, or I'll.
So it's a sector fund. So it's a sector fund, and every sector, they have their own cycle. So if you are an investor in share market, you really have to understand these kind of nitty-gritties and the way the market also moves. So there'll be times when you will see bumper returns, and you might be tempted to maybe put in more money or even withdraw money. And when definitely the fund is not performing, you will be like given up hopes, and you might just want to come out of it. But then, as you rightly mentioned, your time horizon is almost 5 to 7 years. So looking at the downturn or the non-performance now, Shweta, should he be coming out of this fund, considering he invested with a very basic mindset of staying invested for long?
I think since he's seen a period of underperformance, I think he should wait it out. I think that would be the smart move right now, because otherwise we would exit now and he would see that this is the gains that he missed out on. Since he's seen periods of non-performance, I think it's better for him to stick it out for the next couple of years here.
All right. All the best, sir, for your portfolio and the kind of changes Shweta has also recommended. Please try and do them in your portfolio. We move on. Shweta, next question is from Pradeep Jha. It's a question via email, and he's been an investor in mutual funds since 2007, and he wants to know about Nippon small cap, SBI small cap, ICICI emerging fund, HSBC small cap. He's been investing in these funds maybe, and total SIP amount is 8,000. Daily SIP 100 in small cap, and Nippon large cap fund is what is he saying.
Okay, so he has too much in small cap. I think that's the main takeaway for me. He should, even if its time horizon is 20 years, he should be making sure that he has good diversification. Otherwise, the portfolio will see huge bouts of volatility and underperformance at times, and there's nothing to sort of give it that cushion. So I would recommend that he invests in an index fund like a UTI Nifty 50 or a DSP Nifty 50. So that would give his portfolio that cushion, and that should be the core portfolio actually. Small cap shouldn't be the core portfolio for him. The other thing that I noticed is he's doing a daily SIP, which is really not needed. He can do a monthly SIP in the scheme as well.
We move on to our last question of the day, Shweta. It's from Daksh Singhal. He's 22 years old and he's been doing SIP in Mira Asset Mid Cap Fund 2000, HDFC Small Cap 2000, Quant Small Cap 1000 rupees. And from last 1 year, rupees 1000, he's been increasing after every 6 months in his overall SIP amount. So, how can he achieve 1 crore with what kind of investment amount and how many years?
So he wants to get to 1 crore. So if he wants to get to 1 crore in years, he will have to target 45,000 rupees monthly SIP. So that's how he can get there in that time. With the rate at which he's going, he would probably take 15 to 20 years because he would continuously need to keep increasing his investment. The other thing that I see is that, again, there's a lot of mid and small cap. I think he's seen the performance in the last couple of months and started. So I would definitely recommend that he does take a longer term horizon and not, just stick to small cap. He also adds on passive funds, large cap funds to make sure that this portfolio is adequately diversified. So a UTI Nifty 50 or a PPFS Flexi Cap would be a great addition to this portfolio. If he doesn't want to continue with so many schemes, he can cut down the HDFC Small Cap Fund here and instead do that. And with every additional SIP, I don't think he needs to keep increasing the number of schemes. He can increase amounts in some of these.
All right, so that's the portfolio suggestions or recommendation for Daksh. And with that, thank you so much, Shweta, for being on the show and helping our viewers with their mutual fund portfolio queries. And time to sign off, but I'm going to leave you with our WhatsApp number and email ID where we keep waiting for your queries. 865-797-4571. That's the WhatsApp number. The Money Show at 18.tv's email ID where you need to send us your mutual fund portfolio queries. Thank you so much for watching. Goodbye.